Good morning, good afternoon. How's everybody doing? Well, the great bear market of 2026 lasted for a whole day. Oh, good afternoon, everyone. Good morning to those stateside. Hey, Zeth, what's going on? How you doing? Welcome to the folks joining us on YouTube. Well, minus 35. You're not in Vancouver, eh, Travis? What's up, Dark Bunny? Every time I see Dark Bunny, I think of Bad Bunny, the singer. We got Bad Bunny and Dark Bunny. Oh man. Okay, it's almost Friday. Hey Juan, ¿qué pasa? ¿Todo tranquilo? So, Travis, you're in Fort McMurray? Dear God. Man, that is cold up there. And you're working outside too, right? You're welding outside? You're a better man than me, that's for sure. That's nuts. Oof. So, let's see. Well, we had the great bear market of 2026. We did a look below and fail of 68.64. So now we're going to rotate back up, and we're almost looking at a gap fill. Almost looking at a gap fill here. It's pretty interesting. You can really see the shorts holding the bid in this market. Now, what do I mean by that? And welcome to everyone. Excuse me. I'm still struggling with this cold, so I apologize if I cough and I sputter a little bit. So we still are holding the bid in this market. What does that mean? And we also have a double distribution in for market profile people. Okay. So market profile, you can really just waste a lot of time on it. But if you want to trade and make money, you can just keep things simple. And I like to keep things simple. Um, you know, and market profile should be simple. So we use market profile to figure out where the inventory is, right? And first of all, let's go look at step one, right? Everything we do every day is a same series of steps. So that way we have a way of doing business that's the same. Like a baker makes bread the same every day, right? You know, you do the same stuff and then you have to adapt if things change, right? So overnight inventory, overnight inventory is the time and volume spent with respect to yesterday's close. So overnight inventory is long. It's about, I'd say, 98% long. You look at the volume traded above the close as opposed to below. Okay? So on a retracement, right, the normal course of business, and this is why Doc is looking for a short, is when the market opens, we should correct inventory lower. Right? He's looking at 42 to 37, which takes us right into yesterday's range. Okay? So that's why traders will look at that, and there are a 70% chance, 60 to 70% chance that the market will correct inventory. Now, what happens if it doesn't correct inventory? Right? Right? The road to hell is paved with good intentions. And everybody's got a plan until they get punched in the face. That's why we use stops. So if the market opens and we cannot get down to yesterday's high, if we open here at 69.53, we are going to open on a gap. What does a gap mean? Okay, I'm going to tell you what a gap is. A gap is a change of business. So if you were paying 64 to 6,900 yesterday, you're going to have to pay more today. Does that gap hold? Right? Hey, Badir, how you doing? You feeling better? Does that gap hold, or do we fill the gap? That's number one. So inventory is long. Number two, if we were to open here, we got a gap. So long inventory and a gap underneath, we are looking for a gap fill. If the market opens and it cannot get down and trade at yesterday's high, it's telling you that the people, because yesterday everyone got short underneath 68.84. And then in this washing machine action of yesterday, they are short under 69.10, which is our high is 60, our low of today is 69.11. Okay? Okay, good to hear, Badir. Good to hear that you're feeling better. So, where's the inventory from yesterday? 70% of the inventory or cost basis is under 69.10. The day before's cost basis is under 68.84. So we are taking these 2 days of cost basis and we're selling them up here. Right? If we run out of buyers, we're going to have to put the market on sale, and that's what the shorts are looking for. Now, what happens if that doesn't happen? Well, that means that we've got enough people short underneath 69.93 and underneath 69.43 that when the market opens and they come into cover, we could get a gap fill, which is around 69.60 and change. So we're a couple of points away from a gap fill here, my friends. Right? This gap down here was supply, a massive amount of supply. This overhanging supply liquidated into wholesale positions. First, the short sellers, the smart short sellers came in and covered. Then wholesale longs built a position. Then we came in, and then the short sellers who shorted here are pushing price up as they're covering because all of the cheap stuff is taken. So they've got to pay more. So we are looking for a correction to overnight inventory lower. If you are short and the market does not get underneath yesterday's high, be careful. Now, yesterday showed us that this market has big up and down ranges. Look at that. So the market moved up and then it liquidated, but it did not take out the close of the previous day, maybe by one tick. found the bid, and then ripped up. So there's a lot of people short under here. If we get underneath yesterday's high, this area at 69.20 is a place where you're going to look for bids. And then, of course, the overnight low, and then 69.03. Okay? If we get accepted above and put in a new overnight high and take out 69.63, well, we are going to be in price discovery, and we're going to use these levels here at 69.73, 83, and 93. Because what this was, my friends, this was the margin robbery of 2026. Okay? This is the 26 margin robbery. What does that mean? It means the margin players who were long here, they got margined out. We stole. It's like holding somebody upside down, and we shook all the money out of their pockets. We took it in, and now we took it and we're reselling it. Okay? That's how markets work. Right? Yesterday, everybody thought this thing, we were going to invade Greenland and all of this stuff. Then he came out and said, it's just kidding, man. Just take it easy, right? And the market rallied. So all of those people who trade news are jammed short, adding to it. Now it's a paid. Let's go take a look. We have a poor high in Globex, which means the sellers are competing right here at 58.5. The gap fill is at 60.5. So let's see. This X period here opened it. It came down. The cost basis of the overnight, the distribution of that cheap product is here. You'll notice that low at 52 could not take out 50. So when a market liquidates down to cost basis and stops, that tells you this is just light selling. It's like a gentle rain. It's not like a huge torrential downpour, right? Does that make sense? You guys, do you understand? What is not given? Oh. What is not given, Charles, is that we correct inventory for sure. See, in normal course of business, right? In the normal course of business, we should do this. But if that does not happen, the market's kind of, sorry, Charles. The market's trying to go psst, 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 psst. Don't short. Does that make sense? So the market does not do the normal course of business. What's normally going to happen, it means that something has changed. Right? And as traders, we have to manage change. Right? And we have to manage our risk around that change. So if I was short, say I saw a poor high, and I shorted 57 and I put my stop at 59, and the market got down here and it couldn't take out that 50, I would cover. Now, larger traders may sit there and wait and say, you know what, maybe we'll fill the gap and then the selling will come in, so I'm going to take the heat. Right? So say I'm short 56, 57, I'll take heat up to 62, and that's my cost of doing business. But if it takes out 62, I'm out of the short. The difference is if you're a scalper, if you're trading small accounts, you really, really don't want to have big cost of doing business. That's a business expense. So if you don't have a lot of money, you cannot afford to have big business expenses. Hopefully that makes sense, right? So now what we're going to do is we're going to zone in on the area that we're in. This is like a map of the city, okay? And here on the 1-minute candle chart, this is a map of this neighborhood that we're in. The neighborhood is near that overnight high. So we're going to use that 1-minute chart, which is the best order flow software that money can buy. And it's going to tell us where the sellers are. Right now, we know we have sellers at 58.5. So we're going to zone in on this, and if the market starts offering above, oh boy, then we know. right? Then we know, hey, listen, we're going to have to, we're going to have, if you're short, be careful, right? These charts are your best friend. They will tell you where the buying and selling is. Look how we're creeping up to that overnight high. Hey, trading, what's going on? Right? Yeah, the shorts have been in a slow cooker now since yesterday. Right? Very frustrating. And what do I always say? This market has the most annoying habit of running out of supply just when everybody gets short. Okay? Now, we're going to have what they call a gap and trap. Right? You gap a market up, right? Yesterday's high is, where is it here? It is 69.40, 45 quarter, right? We're going to gap it, and we're going to try and get as many tire biter longs, right? Right? That's what I call people who chase highs, right? They're tire biters. They're like chasing a car and biting the tires, right? They are going to come in and buy looking for a breakout. Some of them will win, some of them will lose, some of them will sing the blues, as REO Speedwagon says. Right? Let's see. But the main thing is, we want to see where the selling steps in. It should step in somewhere where that gap is. Okay? That's normal business for large traders to sell the gap. Because that's where the buying, when you take that stop at 58.5, it's going to create some buying. And if you were long 1,000, 2,000 contracts, that's where you're going to be selling into it. Unless you see a lot of people lining up to buy, right? And if you see a lot of people lining up to buy, what is the common sense Joe business guy thing to do is to raise price, right? When you see buyers, you raise price, right? When the buyers start going, yeah, maybe I'll go down the street, that's when you lower price, right? That's how business works. Exactly, right? That's what we're doing. We're raising price, we're lowering price, and that's why they call it making a market, my friends. That's why they call it making a market. Okay? Why do I think 99% of people lose money when they're trading? Because they don't know what the hell they're doing. Right? First of all, they don't know what they're doing. Second of all, they're getting bad information. Thirdly, they have no discipline, and they don't treat trading as a business. Shall I keep going? What is my opinion about filling the gap? The down gap? My opinion is about as worthless as you know what on a bull. Right? I have no clue until we go and hit it with some order flow. I'm not a fortune teller. I'm a trader. So I see sellers at 58.5. Right now, if we were to open and we know that there's selling competition at 58, we might not fill the gap. We might open, go sideways for 20 minutes, and then fill the gap. Right? I cannot predict the order flow that comes in. And that is the last thing I want to do. So it doesn't really matter if I have an opinion. My opinion, it has to be based on what the chart's telling me. And the chart's telling me that we have a seller at 58.5. I could think we fill the gap or not fill the gap. The market could give a flying you-know-what. Right? So my trading would never be based on that. I will let the large multi-million-dollar, billion-dollar traders figure that out. Once they figure it out, I can take a trade, right? I'd be looking for, in my case, what I like is I like the look above and fail of 61.60, 69.61. Like if we go up, fill the gap, and then come back in, right? My trade will be short 60, stop 62, and then put some bids in here and try and cover. That's how I would trade that. Right? If we fill the gap and we keep going higher, I'll wait, right? I was talking to somebody today and I said, listen, you know what a snowplow does, right? When it snows on your street, you wait for the snowplows to clear the road, right? Otherwise, you're not going to go anywhere. So my philosophy or business revolves around letting the snowplows, that's the large, big institutional traders, let them go and figure out the levels and show me where the buyers and the sellers are, right? Then I can chill out and take a trade. There's no use in me going first. What the hell am I going to do with 5E minis, right? I'm not going to move the market. You guys feel me? You guys understand what I'm saying? Let the snow plows clear the street, then go and participate. Till then, just relax, right? The more relaxed you are, the better you're going to trade, right? No reason to get involved into a fight. Let them knock each other out, and then we'll go, oh, okay, right? Then we can go steal their wallets, right? 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 Yeah, see, when I tell people to be patient, they flip and they do the opposite. So I say, hey, be smart. Be crafty, right? You know? It's like you let these guys fight it out, and then when they knock each other out, you can steal both their wallets. You know what I mean? Right? You don't want to try it. You don't want to try and steal their wallets when they're conscious, because you'll get your ass kicked. Right? Retail traders, we got to be sneaky, man. We got to be sneaky. Right? We don't have the luxury of being able to be in a trade and be down 20 grand in a trade, right? We don't have that luxury. We have to, we have to watch our money, right? We don't have money trees in our backyard. So let's see what happens as this market opens, right? And we have to be patient because we have to wait for the market to show us where to take the trade. Especially at these gap fill situations. Because it's not predictable. Exactly. You got to wait for prey like a predator, right? We don't want to be the prey. And that's why retail traders lose money, because they are the prey. They're not the predator. So what I do at Trading Syndicate is I teach you how to be the predator, right? I teach you how to be the predator that waits for their opportunity. And then when we see that opportunity, we execute ruthlessly, and then we get the hell out of Dodge, right? Because that's another reason why retail traders lose money, is because they try and trade like fund managers. So they're trying to trade like they got $200 million and they got $2,000 in their account. It's not going to work, right? You got to stay in your lane. You got to know where you can afford to do business and where you can get the hell out of Dodge, right? Don't overthink this stuff, right? Just keep it simple. There is no reason to get all wound up and then start doubting the chart. You know who I'm talking to, right? And if you start doubting the chart and you start getting these weird thoughts, what I call delusions of grandeur, right? Stop trading, right? You raise price if you see buyers. Remember, you're there to sell a product, JTM. So if I have 5,000 contracts for sale and you have 5,000 contracts for sale, and we see not that many customers coming in the store, that's order flow, we'll start lowering our price to capture the buying. The trading strategy is to sell as much as you can, as high as you can, for as long as you can, until you have to put the crap on discount. Does that make sense? Remember, ladies and gentlemen, no matter how many times people talk about algos and all this stuff, right? It's about moving product, right? Remember the 1980s, Crazy Eddie's stereo shop? You know, how do we keep our prices so low? Volume, 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 right? So wholesalers raise price when they see buyers. They lower price when they need to get rid of their inventory. Just like a store. Pretend this is a chart of bananas, right? You want to get rid of those bananas before they go bad. Whatever chart you're looking at is simply a sales chart. That's all it is. It's a sales chart, right? You're keeping track of sales. So let's see if we hit that stop at 52. We are now open. We're looking for the bid. So we took that stop. It's like opening the door. Some buying came in. Let's see where they sell into it. Overnight inventory is long. Okay? So if you are short, 55 is your warning, 58 is your out. So if you're shorting this, right, you could see some volume coming in here at 53. That's not a good sign if you're short, right? See? See how those size buyers came in and they sucked up all the product, right? There's that seller. The seller's there at 58. Let's see. Watch 58. Gap fills at 60 half. So I would wait until these guys work this out. Sellers have moved up a little bit to 58 and 3/4. Summer? I know I work. I don't summer in the Hamptons, if that's what you're thinking. Or Nantucket. You know, I don't do that. So I see sellers at 58. If you're a fast trader and you're selling this area, your warning is 58. Your stop is probably that gap fill. What do I do with my summers? I work. I'm a worker. I've been working my whole life. Okay, there we go. We are one tick away from the gap is filled. Okay? So a gap is filled. Okay? Now, let's see if they sell into it. If we stay above the overnight high, look for bids. If there's no serious buying at the overnight high, we'll come back down into the open. Watch the overnight high. Watch the offer. See, look at the offer. The offer is lifting, right? We don't want to be shorting a market where the offer is moving up. Does that make sense? You want to short a market when they're raising price. You want to short a market when they're lowering price. Watch the market when it gets to 58 half. If it doesn't bid 58 half, we'll drop underneath it. But so far, if enough people shorted it under 58, they're going to have to start covering. See, that's all short covering volume right there. Right? So that's a fail to take out that 61, right? It's back and forth. It's kind of hard. So if you're shorting now, right, because we failed to take out 61, that's where your stop is. Right? And make sure you put some bids in and you cover. Otherwise, if we get back up over that overnight high, watch your whiskers, right? Watch your whiskers, right? We're still working out this area. So if you are trading this, trade this with small size. Don't go crazy, okay? Don't commit all your resources to one trade. Right? I'm short 57 and 3/4, and I covered at 56. I'm just scalping the micro just to see where the bids are, right? Just to see where those bids are. Just a quick trade to see if my brain's working. Right? I haven't been trading this week at all, and last week because I've been really sick. So usually after I'm done these streams, I just kind of collapse and go to sleep. This flu has been a real doozy. Oof. So if you're short, your warning level is 58.5. Your out is 60 to 61, depending on, if you're feeling like Daddy Warbucks, right? We're in distribution, right? The, the, the cost basis is here. We're selling it here for profit. When we run out of buyers, we're going to have to put this on sale. So let's see if we stay underneath the close now. That's your new reference. The open. Staying under the open and taking out that A low, it's going to target that 50 area, right? I'm short 54, covering 52.5, covering 52.25. I missed it at 52.25, so I took the offer at 52.75, right? I am scalping the micro this morning because I'm still not feeling well, right? NQ's getting smacked? Okay. I haven't looked at NQ. Okay. Right now, if we take out 52, everyone who's long above 52 is not going to be happy. So we might just do one of these, back and forth. Let's see. Just relax. Take it easy. Lots of data today. All right, we might just rotate between 52 and 56, 57. There's a lot of people short from yesterday. There's a lot of people short from early last night. There's a lot of people short from later on in the Globex session, right? So there are different time frames of short traders who are trying to get business done and trying to get out of those positions. Let's just relax, let them do their thing. Right? So we have a bit of a rotation. Right? As my client the Penguin would say, rotation. Right? So if we hold that rotation, what you can do is when it looks below 53 and fails, you can buy 54, put your stop here, sell into the strength. Right? If you're shorting, you want to wait for a look above and fail of 58. Gosh, I haven't looked at the Dow in probably 20 years. What's the Dow doing? Anybody got a quote on the Dow? I still remember when the Dow took out 10,000. They gave us hats. Dow 10,000. Right? Now, if we hold 58, right? If we hold 58, you're going to get this. Oh, it was an event, Rich in Naples. I keep seeing these videos of Naples where alligators are just walking across the road, like it's just an everyday occurrence. So this is 4 times profit of our cost basis. And now we accept above 61. This is where our short sellers are there. You know, if we start, we can't get back under 59. It's going to get ugly for our shorts. And this is 8 times cost basis. So how do these zones work? They're just, how much did I pay for my crap? This is 2 times profit, 4 times profit, 8 times profit. Same with discount, right? There's how much you paid for your stuff, 2 times discount, 4 times discount, 8 times discount. Right? Once we set the cost basis, we know these levels work pretty nicely, right? So right now I'm focused on that overnight high. I know everybody, his dog, his cat, his alligator are trapped short underneath, right? Because you see the offer is now starting to lift, right? So once again, right, it's a margin robbery, my friends. I'm looking for 63 and a quarter. Did we hit it? We hit 63 half. That's one of my next levels. The next level up is 73 and a quarter. There should be some inventory in the shelves above 73 and a quarter, okay? If there isn't, I'd be very surprised. But we are back dangerously close to those all-time highs. Does anybody actually trade the RTY anymore? Nobody's asked me for an RTY quote in months. Good stuff, Jam. Yeah, RTY, it goes like, I remember there was a time where everybody wanted RTY and I was calling out both markets simultaneously. And then, like 2 weeks later, nobody looked at RTY. Nobody wanted it. I'm like, you guys want a chart? Nope, crickets. So we are now distributing what we bought under 58 above 58. And we're using the trap shorts to hold the market up and provide support, right? Support in a market is created by unfilled buy orders. Resistance in a market is created by sellers competing and lowering price to get rid of their inventory, right? If you're going to trade resistance, support, and resistance, you should know what creates support and you should know what creates resistance. Now, if we get back underneath the overnight high, we're going to look for bids. See, I hate trading this when it's doing this back and forth over the overnight high. I'll let everybody else go first. I'd much prefer a short if we take out the open maybe and take out that stop down to this stop at 46. There's going to be some buying at that gap fill. Now remember, yesterday these markets were very speculative. So if you do see selling, don't stand in the way of it, right? Just because we opened on a gap, that gap, there's no sacredness in that gap. It could fill instantly if a large seller comes in, it'll gun for that gap because it knows that there are buyers here. So if I had like to say, if I had 10,000 contracts to sell, right? If I had 10,000 contracts to sell, and I know there's buyers down there, I'll just bang this out. There, see? I told you. There it is. Didn't I tell you? Right there. It's like they heard me. Did you guys see that? That's a large trader going, ha ha. Right? They're not getting rid of, there's too much competition. I'm going to step in and bang it down. And look where it stopped. 1 tick, 2 ticks where that stop is. Right? There you go. Now you know who's playing in the game, who's in the zoo today. These are speculators. They trade hard and fast, and when they come in with size, you better get the hell out of the way. That's okay, Truth. It happened quick, right? It happened quick. It's not that I have a crystal ball, Chadwick. It's what I would do, right? If I had to sell size and I saw you guys competing with me, I am going to rip your face off and hit every single bid. And I don't care who I have to destroy to get down there. Right? That's how size trades, right? No, you know the shorts are trapped underneath that previous day high. So if you need to move product, boom, boom, you hit it hard. That way you can get rid of a couple of thousand contracts and you're done. It's an institutional order. It's not like a market order, right? So all you have to know, it's a size order and you should not have been long, right? If you were short, you should have been covering the 46s, right? Say you were building a short position above 55 and that big seller came in, you should have had your bids in right where I told you at that 46, 47 level. Now we're going to come up to that 54, 55 level again, right? Let's see where the seller is. The sellers have been here at 58. Now they've moved down here to 53. Right? So if you're a position trader, as long as we don't take out 53, we should come and tickle VWAP again. Make sense? Okay? This is the mechanics of trading, my friends. Let's look for a gap fill now, right? Remember, there's no sacredness in this gap. One more tick and we fill it. Remember, overnight inventory is long. It took a while, but now we trapped all these people over 54. They're starting to puke. The wholesalers who are long here and here and down here will outcompete the trapped longs. See how we come right to the stops? Beautiful. Right? It's very mechanical, very controlled. Yeah, so if you know there's going to be supply at a certain area, you sell before that. If you know that there are going to be bids at a certain area, you'll go hit those bids, Dragon. Right? And this is what I teach you guys when I do the one-on-one mentoring. We understand the different types of order flow, the different kinds of business. We are in a very speculative market. So if we take out this gap, my next area of interest is 69, 39, and 3/4. Because this is our next short position. The shorts are trapped from 35 to 39. So as the market comes down, there you go, Doc, right? If we're underneath VWAP, you're going to ride that short, Doc, like Jam rides his Honda lawnmower. You're going to just keep riding it and mowing the lawn all the way down, right? Beautiful. Beautiful, beautiful. There we go. Now we're cooking with gas, right? There we go. There's going to be some bids here, so you'll get some responsive buying. 37.25. Right? Be careful don't try and buy the dip now, right? Because we trapped all these poor souls above 40. They're not all going to sell at the same time, but they will sell. And when they go to sell, the wholesalers will undercut them. right? So those Globex singles, Ginja are almost filled. One tick, right? So as the market comes up, beautiful. Nice trading, Doc. Way to go, right? That's a beautiful inventory correction trade, right? Globex singles are filled. That short position is filled. Next target, 69.28 and a half, right? If we come into this 34 area, we're going to drop in like surfers at Mavericks, right? We're just going to keep dropping in and dropping in and dropping in. This is speculative trading at its finest. Okay? Beautiful. Right? There's going to be a few bids as we come into in the old cost basis is here, right? The value area low or the cost basis low of the overnight is here. There'll be a little responsive buying, but they're going to sell into it because, hey, let's face it, they're long under 33 and long under, really under 69.04. So whether they sell it at 35, 36, 32, 31, it's still all profit. Okay? I'm waiting for the next candle to open. If the next candle opens and it can't take out 37, we'll still continue our trip down, right? Here's that next candle, right? It's doing a little look above. There's going to be a seller somewhere here. I think it may be 40. Let's see. Wholesale will build a position above the trap shorts. Well, wholesale will trade the order flow that comes in. Right? The top of that candle is 43, so I'm expecting some selling somewhere in this area here. If we accept above yesterday's high, careful on the short side, okay? The next sellers are going to be at VWAP. Right? So these candles are fairly big. You want to manage your risk with size. There should be some selling here. If there's no selling here, the market's trying to tell us something. Okay? What did I miss? I missed the look below and fail of 37.25. So there's sellers here. There's sellers here. Let's see when this candle, let it process out. Oh, there's data, right? Thank you. Thank you, Leslie. Now, when the next candle opens in 20 seconds, it's going to tell you where the next sellers are, right? So sellers are here, here. If they continue lower, that's good if you're short. If they start taking out these levels, it's going to target VWAP again. So you got to be careful, right? Right? If you're struggling with your trading, send me a DM. Right? If you want to improve your trading, if you want to improve your risk management, if you really want to learn how to trade for a living, for income, reach out. We can help. Okay? So now the sellers are at the top of those two candles, but as soon as they see buyers, they're going to try and coax those buyers higher until there's competition. Right? It's never buyers and sellers fighting each other. It's sellers fighting each other to grab profits. Right? So if we start lifting that offer, right? If you are a short seller, this is that area that you want to be careful about, right here. See? There we go. I'm short 41. I'm covering these 36s, and I'm flat. Right? I saw the seller. I saw the seller here. I shorted 41. I had my stop at 43.25. And as soon as it dropped down to 37, boom, covered. Right? I was stalking this trade. Right? Waiting for it. Right? Waiting for it. And I'm done. Right? What confirmation did I see? I saw a seller, Sean. I saw a seller here. I saw a seller here. And then we looked above. We didn't take out 43. I saw the offer moving lower. Watch this red line. You see the red line and the green line? The green line sets the price. I mean, the red line sets the price. The green line follows it. I knew that they were going to front run VWAP. Right? On this candle, we couldn't take out VWAP. Then the sellers lowered their price. So when the sellers start competing, that's when you short. This is the front end of the move. This is the back end of the move. You always short the back end of the move because then you got a place to put your stop. Because if you lose that seller, then the trade stops making business sense. Does that make sense? And also inventory is still long. Right? Oh, I didn't see that, Steve. Yesterday was a tough day. What did I tell you guys? And you can tell who listens to me and who doesn't. I said risk is off. It's a risk off day. He's going to change his mind sometime this week. He did it the same day. Right? You got to be careful, man. I'm telling you guys, when I tell you to do something or I tell you to watch out for something, you got to pay attention. Another reason why retail traders lose money is they don't pay attention, they don't listen, and they don't do what they're told from a trusted source, right? They think that they're smarter than the chart. And that, oof. I told you guys to be careful yesterday, right? I told you. Nobody should have blown up their account in my room yesterday. right? If you did, it means you don't be managing risk, and you would have been fired, right? You gotta really, really watch. You gotta pay attention. You gotta treat this like a business. I know it's different now because we have these funded accounts and you guys can blow up accounts left, right, and center. But please do yourself a favor, right? Pay attention. You know, yeah. It's okay, Barky. Hopefully you only learn that lesson once. You're in retail, so you get a second chance because you're probably trading a funded account. But in a workplace, it'd be bad. Let that be the last time you do that. Yeah, right? All day I was telling you guys, be careful, don't overtrade, don't overtrade, don't overtrade. But I know people don't listen. So you try, you learn, you learn. Now we're right back into that chunk of volume from the overnight under 69.33. And I'll just wait for the next setup. Yeah, retail, unfortunately, retail teaches you to follow price and get suckered into things. We have to break you of that, right? We have lots. We have all the coach. We have all the tools, right? Hopefully you only make this mistake once, right? I came from a background where you're not allowed to blow up accounts. You're not allowed to make mistakes like that because once you make mistakes like that, the people who run the firms, they know that you're a risk junkie and you'll never get hired. You'll get fired and nobody will touch you because any idiot can take down a brokerage firm, right? And you're a liability. People don't want to have a liability at work, right? Pretend you're your own client and don't be a liability to yourself, right? We have to be practical, ladies and gentlemen. You know, you know what I'm looking for here structurally is this area right here. You see the high where K and L period came down, right? That's where the position of yesterday at the close is parked under there. So let's see. Oh. Right? This is a speculative business, right? Yeah. Right? We try. We hate to see people lose money. Days like yesterday were like a rat's nest. Why would you size up on a day like yesterday? Right? You're not being a prick, Steve. You know, this morning I was on YouTube and this guy said to me, he said, you know, I used to like you better when you didn't criticize other traders. And I said, well, how? I said, what? I'm supposed to sit there and say, oh, it's great to lose 300 grand in a day? What are you on glue? What are you sniffing glue? Right? Oh yeah, I used to like you better when you were like a docile dog, right? Exactly, $6 million man, right? Got to trust the candles. You got to trust the chart. You know, this year, last year, I was nice on people and they lost money. You know, this is not a business that is forgiving, unfortunately, right? This is not a business that forgives stupidity. It punishes it. it you know, it punishes it hard and fast. Oh, I've made mistakes too, but I've never blown up an account because where I come from, blowing up an account means you should go do something else for a living, right? If you cause a huge loss at a brokerage firm, you don't get a second chance. You get shown the door. In fact, they actually escort you out of the building. 2 security guards show up at your desk. You have 5 minutes to pack up your belongings and get the F out. That's how it works in my business. I have lots of written material. I have 400 YouTube videos. I do one-on-one coaching. Our room's only $29. Come check us out. We'll teach you the business. What kind of loss on a desk? There are trade errors, Dragon, but it's not a forgiving business. Take a break, Marky. Take a break. Go read Taco's document. I wouldn't paper trade. Right? Turney Duff, when he made a trade error, you know what they would do to Turney when he made a trade error? They put a dunce cap on him and they made him go stand in a corner. See, and this is where the type of training I do in this room and in my coaching, I teach you how to be a risk manager. I teach you how to be the owner of your firm. I teach you how to be a compliance officer so you don't have those things when you're sitting by yourself, right? Cesar, just come into the room. It's only 29 bucks. You're going to spend more going to Starbucks over 2 days. I guarantee you I can teach you more in a month than you'll learn 10 years anywhere else. I will guarantee that. Right? If you're managing size, that's because you haven't been taught how to manage size. And it's hard to practice if you don't know what the steps are, if you don't know what the procedure is, right? Come into the room. I've been sick for the last 10 days. Next week, we're going to be doing execution labs on Wednesdays. Maybe even twice, right? Maybe even twice next week, we'll do an execution lab, right? I need to get rid of this flu. It's holding back my energy, and I can't do as much work, right? Once I get rid of this flu, this year I'm going to be doing execution labs at least a couple of times a week, right? Thanks, Steve. Right? Come into our room. We're not making a lot of money off you at $29 a month. And even my lifetime coaching, I severely undercharge for it, right? You pay a one-time fee, and I work with you for life, and my results are guaranteed, right? We'll see you there next week, Cesar. Ven aquí. We're here. I'm here every day. I just got to get rid of this stupid flu, and I'll be back to 100%. Ugh. Yeah, 68.96 is a good level, Doc. If we could take out that overnight low, then all the overnight inventory. Doc's looking at 68.96, and I agree with him because if we can take out that overnight low, all of this will tumble out like a piñata. Right? You got to be careful. Now, Doc has been with me since the beginning when I started this room. And he is like he's having a good week, he's having a good month, he's having a good year, but he's been through the spanking machine a few times. And he has taken the time, he has learned, and he spent God knows how much time learning this. Right? So when you see guys like that making 20, 30, 40 points on a trade, don't try and imitate him. Learn the basic fundamentals of how he does business, and we'll teach you that. Right? We'll teach you that. We still haven't corrected overnight inventory in a meaningful fashion, right? To correct it according to the market profile, guys, we have to tag the close. You see, this is a little short covering here, right? Right? We are in here. Let me show you. See this chunk of volume here? We came into this chunk of volume and we stopped. If we take out this overnight low, then all of the candy above it will start falling out, right? And that's what our larger traders are looking for. If we get accepted over the previous day high again, then they got to be careful, right? But they have the money in their accounts to manage larger risk. Risk is your business expense. So if you're a larger trader and you're trading with, say, $4 million, you can spend more on business expenses than someone who's trading with $4,000, right? Yeah, this is a backfill, right, Jam? Right? You go up to create demand, you go back and fill in that demand with supply. And that, my friends, that's how you move product, right? Right? Remember Seinfeld? Bad lighting and cheap fabric. That's how you move product, my friends. Right? Bad lighting and cheap fabric. That's how we get rid of product. Okay? That's what this business is all about. Bad lighting and cheap fabric. Okay? We're just trying to move as much product as we can. Make them think that they're getting a good deal so they come in and buy. Right? You know, all we're doing is we're selling ES contracts. Right? Right? Just, right? Focus on your trade setup. Don't worry about volume analysis. Right? Just keep it simple. Keep it simple so you have both hands free to punch. Right? Keep your analysis simple. Right? So when it comes to execution, you're free and clear in the head. So you can slip and duck and dip and dive instead of getting punched in the face all the time. I know retail trading is one of the hardest jobs in finance because you don't have a support network, you don't have education, you don't have oversight, you don't have anybody to bounce things off of. And that's what we do at Trading Syndicate. We try and give you that framework so you become like a little brokerage firm in yourself. So you learn how the business works, you learn how to manage risk, and you realize, hey, I only take trades when it comes to an edge. I'll take a long, I'll put in my stop, right? So long, stop, and I'll sell into this strength. I know there's going to be a seller here. So if I'm long at 28, I'm going to sell 34. I'm going to take 4 to 5, 6 points, right? And you think 4 to 6 points is not a lot of money. Multiply 6 points times $50 a point times 8 contracts. Right? Once you start getting good at this, all you have to do is add a little size. Right? You don't have to look for a 40-point move. Right? You know, 6 points on one contract is $300. Multiply that by 8, that's a $2,400 day. There's 20 trading days in a month. That's 48 grand a year. And you're not looking for 30-point trades. I'm telling you, folks, stop getting sucked into I need to make 50 points. I shorted the high and I bought the bottom on a 100-point day. You don't need to do that. Why are you driving yourself crazy and bankrupting yourself and losing all your money? Right? Come learn how to trade with common sense in a practical way. Right? I told you there'd be a seller up here. Look, they came in, right? So if you were long here and your stop was here, if you didn't sell here, right? The look below and fail of the previous day low is a good trade. But if you are new to it, Slippy D, I'd start using the candles and practice the look below at the edge of a level. Then that's going to build up your execution skill, and then you'll be able to take the look below and fail of the previous day low. You know what I mean? Start small. We need 40 points to fill the gap. What gap, AO? I thought we filled the gap. Which gap are you speaking about? Yes. Next Wednesday for sure. I better get rid of this flu this weekend. That's it. I'm tired of it. Leslie, how long did you have this flu? You had it for 2 weeks, right? My expiry date is coming up on this flu. I'm tired of it. Got to get rid of it. Oh, you're one of those Cool Ranch Gap guys, right? Down to the close. I know what you're talking about now. Okay. We got bids. If we get over 37, your target's around 42. We'll do the execution classes at 11 o'clock Eastern Time. That's good, Leslie. Yeah, I'm still like I've been talking for an hour. I find that when I'm talking a lot, that's when I kind of run out of energy. You would think talking doesn't tire you out, but good grief. We need to get LC back on these streams. Right? We can get LC back on these streams and he could do some talking. Oh. Oh my goodness. So is this Davos thing, is that done today? Are they done? Have they all above 37? If we stick to 37s, you're looking for 42. Oh, that's what it is. Right? Maybe they're all eating fondue now and they're chilling and they'll leave us alone. Price action's not bad today. It's not bad. Hmm. VWAP has to say that there's a seller. Remember I told you if we clear 37, 42? There it is. Right? Now, the position is underneath VWAP. The goal would be to try and take that position and sell it over here. See? If enough people shorted here, we're going to see some bids. Let's see. right? It's all about leverage. Trading is all about leverage. There you go, AO, right? There's that big seller, right? Sell them right back down. See competition at 42. I told you there'd be a seller there. That's why if you were long 36, 37, sell the 41, 42s. Take the 3, 4 points, right? Now we're going to come back to that cost basis at 30. And if we have heavy selling, we'll take out 25 and a quarter. Nice work, Jonathan. Nice work. Beautiful. That is a picture perfect trade, my friend. I'll take 4 points every day, all day, right? Nice work, Jam. Oh, beautiful. Hey, 20 seconds. Hey, 20 seconds is all you need, all you needed to handle your business, right? It's beautiful. All right, my friends. I want to thank you for joining me. Come hang out with us at the Trading Syndicate. We will teach you how to make a living in this business, right? And we're not going to charge you an arm or a leg. Anyone who's interested to level up their trading, right? And they want some one-on-one mentoring. Now, my mentoring program is a lifetime mentoring program, which means once you're in with me, you don't get out until you start becoming profitable. Thanks, Kevin. Hey, there you are. I didn't see you this morning. Thank you, Charles, Raj. Thank you, folks, for joining us on YouTube. Appreciate you guys. Have a wonderful trading day. Don't take candy from strange market makers. And we will see you all tomorrow morning, 7:30 in the morning, UK time. 2:30 in the morning for the insomniacs. Thanks, everyone. Take care of yourselves. And we will be here. Have a great trading day. And once again, thank you for joining us. Bye for now.